Hello there, my friends. Chris Marcus here with you on behalf of Arcadia Economics on Monday, October 16th. Today I have a video for you asking the question of why is the Japanese stock market soaring to not all-time highs, but on this past Wednesday, the Nikkei stock average hit a two-decade closing high. A milestone for the nation's long-suffering stock market, driven by stronger earnings, an improved economy, and better environment for shareholders. Well, I'll agree with the first half of that certainly prices have been driven higher. Again, don't take my word for it. We'll dig through this article just a bit and see if it's really stronger earnings, a better environment for shareholders, or perhaps, in fact, I don't even want to wait. Let's just skip right to it. If you scroll down a little farther here, the Bank of, Prime Minister Shinzo Abe, who is one of the post-war Japan's longest-serving leaders with nearly 5 years in office, has helped push markets up by encouraging loose monetary policy. Shocking. Surprise, surprise, a central bank or president, or prime minister in this case, printing money, goosing the stock markets. The Bank of Japan's annual $6 trillion yen worth of purchases in exchange-traded stock funds, providing a steady source of buying through market ups and downs. Still, the Japanese economy underpinning the Nikkei remains shaky, especially because wages haven't grown broadly enough under Abe to spark solid consumer spending. Again, they're referencing the idea that a lot of the Keynesian economists believe that really to get an economy strong and growing, all you need to do is print money and then have people go out and spend it. If that sounds a little illogical, of course it is. Except for the fact that that's actually the way our financial system operates at this point in time. Now, in case you weren't following, I remember it was fascinating watching Shinzo's electoral campaign. I guess it was 5 years ago. It was 2012, I believe. I remember first hearing of him 2011, 2012, because basically him, Abe, and his team basically promised to print through anything. Crisis comes up, we're going to print that. Bonds, stocks, we're going to print that. Now, traditionally, they just, and again, the Japanese, the inventors of the quantitative easing, which is basically printing money to buy these assets. Now, traditionally, when the Japanese started this, when the U.S. was doing it, they were just buying bonds. But again, the reason I read that quote was here, Bank of Japan buying 6 trillion yen worth of exchange-traded stock funds. So think about that, just printing money to buy stocks. So let's say we're at 0.0. Stock level is at, we'll just say 1,000, just to keep a small, simple example. If someone just comes along and prints currency to goose up the stock market, I mean, of course that's insane. And it's again, not funny, but early in the article here, some money managers say they believe Japan is finally ready to break out, but skepticism about the long-term outlook remains common. And also saying that the reason for the rise, according to the Wall Street Journal, was driven by stronger earnings, an improved economy, and a better environment for shareholders. In my opinion, just running the printing press to devalue the currency isn't providing a better, improved economy or stronger earnings or better anything for shareholders. It's creating a bubble, very similarly to how you have stock, real estate, and bond bubbles here in the U.S. as well, and is no different in Japan. Similar, I mentioned a couple of weeks ago how the Swiss National Bank has been buying U.S. stocks. Again, here we see the Japanese bank buying Japanese ETFs. God only knows what else they're buying. Yet just from the conceptual framework, seeing that You can make these stock levels go to any number you want. It loses the meaning, though, if it's not because someone's inventing a new product or a better way of business or adding value. There's a difference between productivity and just injecting printed money. Because if you print the money, it has to go somewhere. Again, who gets first crack at the printed money is the banks. And what are the banks involved in is a lot of the markets, all of the markets, manipulating the markets, whatever you want to call it. So in either case, when you see the Japanese stock market roaring along and everyone's out with their pom-poms and cheering it on, again, just keep in mind a lot of printed money going on here. We also know how these things end. So could it go higher? Absolutely. But is there a day of reckoning? I sure think so. Again, reason 1,412,356 that I think gold and silver are headed for good times. So with that said,